Alok Saigal is joining us for more on that. He works with the ultra high net worth individuals across the country and is joining us today. Alok, afternoon. Thanks so much for your time. We were looking forward to this interaction. It was planned earlier but couldn't happen for a reason. Good to have you on the show today.
Thank
Let's
you,
start
Ajay.
by getting your thoughts on how is the... Lovely. So, Alok, give us some feedback on, first there was peak pessimism and then a denial kind of a rally, you can call it bear market rally, whatever the case may be.
Right.
How have the big HNI community been behaving in the last couple of months as far as the market goes?
So, see, the thing is, the HNIs are possibly one of the smartest communities in India. And we have to believe that, both by their actions and, for the fact that they are HNIs. So they were, if we saw a lot of pull out of money from, two sectors of the market which were, very heated. So one was the entire private market space. So we saw a lot of pull out from that space, which was, they were investing very aggressively. The other side of the market where we saw some pull out that happened was on the small and mid cap space. And that is where, a lot of pullouts happened. And we have also seen HNIs consistently start adding positions from, around 15,200, 15,800. Sorry, it never went 15,200, 15,800 onwards. And that is where we saw them starting to add positions also. So, but the good part was they never sold, in a big manner. So no selling actually happened in a big way. So that has helped them in good stead.
But are they of the belief, was it a tactical kind of a purchase which was happening, or are they of a belief that time to go overweight on equities has come because the key triggers, be it valuations or many other, or inflation worries, war, all of that have started moderating or normalizing, and hence time to go back to equities?
So I will put it this way, Ajay. I think initially it was tactical. And till yesterday evening, before the event we saw that is unfolded in Taiwan and China, people are again looking to watch that closely. So initially was tactical, and I think one of the factors that everybody is watching, and I think the whole street has been now watching it on a daily basis, is our FIs coming back, and that is also something which is added to a strength in the markets. As you rightly said, inflation abating and the popular perception that maybe inflation has actually peaked out, that has also helped. Structurally, if you ask me, it has still not happened. And we will start seeing a certain amount of FOMO feeling maybe coming out if the market has more legs, and maybe if the market moves to around 17,800 odd levels, then you will see a lot of people jumping in because they will feel, okay, I've missed out on this rally. So it's to answer very briefly what you asked. I don't think people have gone in a manner that structurally that I have to increase my equity allocation. That has still not happened in a big way.
Alok, we are also having this conversation right ahead of RBI policy meet, where the expectation is that anywhere between 35 basis point or 50 basis point rate hike may happen. But bond yields, be it the US bond yields, which softened from 3.5 to 2.5 yesterday, or India bond yields, which 7.65 to almost made a low of 7.18 yesterday, they have softened considerably. How is the fixed income side of the market reading things?
So I think there are two things that are happening, and Indian market is also a lot driven by what's happening in the US. So markets in the US are pricing in a recession and also a flight to safety. So there are two things that are happening. And in both these parameters that I spoke about, whether it is flight to safety or recession, the bond yields would actually come down. And that is the reason for US what is happening. In India, I don't see India entering into a recession anytime soon. And I'll share why I feel that. But in India, two things are happening again. Markets are very clear. RBI has actually been very ahead of the curve. RBI has been a banker, I think, has managed the entire situation right from the pandemic time, extremely calibrated in a very, very good manner. And I think therefore market is getting the confidence that RBI will not overdo anything. And if there's a 35 basis point hike or a 50 basis point hike, maybe that's what it is, and it's not going to do anything further. And that is what is giving market the confidence. And RBI has also done a lot of things in terms of, taking the liquidity out of the market, manage the rupee dollar well. The dollar has, stabilized, at least from an Indian rupee point of view. And I think these are the factors which are also giving a lot of comfort to the markets right now.
How are you positioning or asking your clients to position themselves on the portfolio level for the next 2 to 3 years? We've already seen a 10-month-long correction in the market, but the quality of earnings, the macro data coming in, all of that put together, how is it resulting into action or advice?
So we follow a largely an asset allocation approach for our clients, and Ajay, and we document all these. But having said that, for the last last 6 months, we have been underweight on certain parts of equity market. And as I had mentioned earlier in this conversation, that there were two specific parts that we went underweight specifically was the small and mid caps, and the private markets. We continue to remain underweight on both these factors. We're not giving a buy call on either of them right now, but we are tracking the data very, very closely. I think the time would come very, very shortly. From a portfolio positioning point of view, right now, our portfolios are currently stacked as 45% equities and 50% debt, and the rest 5% is in gold or international. And this 45 has the ability to go to 55 or 60%, depending on certain indicators that we are watching. And therefore, we'll reposition the portfolios accordingly. But currently, we have not repositioned the portfolios. But from a 2 to 3 year point of view, we are actually extremely bullish. The earnings season, as you rightly said, has been very, very good. The demand has been very, very strong in the markets. Just an example, last day it made the headlines everywhere. Scorpio having 1 lakh bookings in 30 minutes. This is what phone models used to do. You used to sell iPhones or some of these Xiaomi phones, etc. In a matter of 30 minutes, 40 minutes sold out. And this is what's happening with a car which is not a cheap car, and this is actually quite brilliant. And this shows that there is serious consumption demand in the economy. This is one indicator. I don't want to generalize too much, but this is one indicator which clearly says that there is a robust demand right now in the markets. And therefore, we are reasonably confident on the growth and the position of India per se. We also feel that even if there's a global recession, India will not get deeply impacted. We are only watching conservatively certain pockets of the market, which we feel are coming back, and we will go slightly overweight on equities reasonably shortly. That is what I would say.
All right, Alok, on that optimistic note, I'll let you go. Thanks so much for joining us. You will be advising your clients to go overweight on equities shortly. That is the word coming in from Alok Saigal. Before we take a break, also hear out a big FII voice